Surprise, surprise, the media is not telling you the truth about the Trump administration's strategies and motives. Today, my guest is Ed Dowd, famed author and former managing director at Blackrock. And we break down the tariff war, the trade war, and the incentives and motivations inside the current American administration. Welcome to the VRIC Media Channel, the most trusted voice in metals and mining. Here is Ed Dowd. Enjoy.
This is Jay Martin.
Okay, here I am with Ed Dowd. Ed, it's great to have you back on the show.
Great to be here, Jay. Thanks for having me on again.
Yeah, pleasure. There's a handful of directions I want to go today. Here's where I want to start, kind of a bigger open-ended question, and then I'm just going to pull on some threads. During the last 120 days or so, would you say that the United States has strengthened or weakened global opinion of the longevity of the empire? And then I want to get into some details.
So the Biden administration did a really good job of undermining the reserve currency status of the dollar. They did that a couple of ways. They put sanctions on Russia with the Swiss system, which is a declaration of war. Then they secondly tried to steal Russia's money that they froze. That really lent a lot of credence to the BRIC talk. It remains to be seen. Well, with Trump, he's firmly wanting to, reestablish the dollar as dominant. The tariffs certainly don't help because that creates a lot of animosity. But it takes a long time for a reserve currency to die, and it's so intertwined in the system right now that it ain't going away anytime soon. And technically and cyclically, my friend Tim Wood, who does a Cycles letter research note, the dollar's been in a bull trend since the great financial crisis. It has a 4-year cycle, ebb and flow from low to high to low. So from one low to the next low is 4 years. And it's bullish every the higher lows and higher highs, right? So that's the trend on the dollar since the great financial crisis. For that trend to be broken, the dollar needs to break 89.10, which we haven't come close to. Timing-wise, last summer he was talking about the dollar timing band for a 4-year cycle low would be first or second quarter of 2025. So if we put it at a low above 89.10, hold that level, we're going to see another 4-year cycle run in the dollar to probably a new high. So that's where we are cycle-wise on the dollar. You can create narratives around whatever you want to create, but it's pretty consistent. And what would change my mind on the dollar reserve currency status is if we were to break the prior 4-year cycle low. That would be alarming, and then we could say that there's potential for the dollar to reverse and start a bear trend. But that hasn't happened yet. So until that happens, I'm sticking with the thesis that the dollar is king, and it's going to confound a lot of people. I think if we do put in a 4-year cycle low above the previous 4-year cycle low of 89.10, we're going to see the dollar strengthen against other currencies. We're going to see commodities get hit, emerging market economies get hit, and it's going to be a problem for the rest of the world, but not for us. That's what I think on the dollar. Long term, something has to change because the dollar system is debt-based fiat. It constantly requires credit creation to keep it going. And the only game in town right now is the U.S. government debt. There is private debt, but the creation engine, the marginal supplier of that debt has been the government. The last 2 years of the economy were definitely juiced by the government and the deficits. So, and we're at 120% debt to GDP. So, timing is uncertain, but the end game is near. So we have, and again, putting a timeline on that is hard, but for this cycle, we're expecting a deep worldwide recession this year. We put out a report on that. And recessions, I know they scare everybody, but there's always winners and losers and opportunities. And people who've been locked out of homes, like the millennials and Gen Z and a lot of people, are going to have an opportunity to buy homes. There's going to be lower asset prices. So, it's kind of a handoff from the older generation to the younger generation, not necessarily a bad thing. But unfortunately, the central bankers and the U.S. government and other governments will do what they do in a crisis. They'll print more money and they'll run big deficits to try to get us out. So that's kind of it's like more of the same until we change the system. So after the recession, we expect them to try to reinflate it, and we'll see what happens there. We don't have a crystal ball. The one question everybody asks me is this going to go systemic? Because it basically almost went completely systemic in the great financial crisis. That's why we saw the Fed and other central banks embark on their crazy monetary policies that we'd never seen before. I don't have a crystal ball. We're not calling for it to go systemic. If we see it happening in real time, we'll call it out. But, I don't want to be a doom and gloomer. I think they have the opportunity to kick the can down the road one more time.
Now, okay, thank you for that. So dollar bull market since 2008, great financial crisis, when it hit a low of 89.10.
No, it didn't hit it hit a low of something like 70 something. The 89.10 was was the prior 4-year cycle low.
My bad. Yes. Yeah. Yes. I'm with you. Okay. 100%. So, but that's the number therefore that you're going to be watching this year, 89.10, to see if we put in a bottom below that or above it, which will lead to your conviction about what might happen next. Nothing certain, but that's a good indicator.
Correct.
Let me ask you, if the dollar bull market does come to an end, a lot of people, Americans specifically, might interpret that as bad news, but is that potentially advantageous in that often weakening your currency is a form of economic stimulus? Because especially in an era where the president's trying to get the rest of the world to buy more American goods, a weaker dollar relative to other currencies is maybe good for the American economy. What's your take?
Well, it'll be good for some, bad for others. A weak dollar would create commodity inflation, which would then have a problem for those who buy lots of consumer goods, make other people rich. It might help with exports relative to other countries. So, the commodities historically are correlated with the dollar. When the dollar is strengthening, commodities go down. When it's weakening, they go up. And if you remember, going into the great financial crisis, the dollar was not doing well because we printed a tremendous amount of money to stimulate that housing boom that eventually blew up. And commodity prices had a tremendous run from 2002 to 2008. It was a commodity bull market. And also, you could also say there were supply and demand issues involved because China was just starting to take off. So it was a confluence of weak dollar and huge demand from China. Look, there's always winners and losers. I have a theory that if the dollar system does implode, it fails up to the point where the rest of the globe says your dollar's too strong, you're killing us, it's destroying our economies. Because a lot of these, we are the world reserve currency, and as a result, we're the world interest rate. And there's about 15 trillion in dollar-denominated debt globally. So they issue a lot of these countries, and their corporations in these countries issue dollar-denominated debts. And when the dollar's strong and their currency's weak, it cripples them because they're paying their interest payments balloon in real terms.
Let me ask you, because I'm actually not familiar, what do we know about longer-term dollar trends? You referenced Tim Wood. I don't read his letter. I wrote his name down. I'm going to start. But bull market since roughly 2008. What could you say about the previous cycles, decades? What is the dollar cycle long-term generally look like? Do you know?
It has bull and bear markets, and it had a bear market going into the 87 stock crash because there was a determined, concerted effort during the Reagan years to weaken the dollar. And so we really haven't had any of those accords where they intentionally announced between the countries to weaken currencies. It's kind of It's kind of not out in the open like it used to be. But the dollar, for whatever reason, has been in a bull market since the great financial crisis, which ended a bear market for the dollar. So, the bull market in the dollar will end at a high, and that's when the new bear market begins. And now we could have had if we violate the 4-year cycle low of 89.10 and going into this low this quarter or next, we may have seen the highs of the cycle a couple of years ago. We don't know yet. We don't know.
Yeah,
but it's certainly the reason I have faith it's going to be fine is because we're not anywhere near 89.10, and the timing band is coming to an end. So the higher you are above the previous cycle low coming into the timing band, now if we started to collapse in the dollar and got to like 91 in the next 2 weeks, we'd have problems, and I would start to rethink my position.
Yeah. Okay.
The smartest investors know that real wins come from thinking independently and spotting opportunities long before the crowd. And that's what we teach at the Commodity University.
If you were to grade the effectiveness of an organization like DOGE out with a mission here to take, affirmative action on the deficit and the debts, how effective have they been? How optimistic are you that they will eventually become effective?
Two things. We issued a report January 9th before DOGE really got in there because the inauguration was January 20th. We talked about DOGE. I was initially very surprised and pleased with how fast they uncovered a bunch of stuff. Lately, they've gone quiet, and now there's talk of the new spending bill, and it looks like it's going to be higher. So we're not as happy about what we're seeing. I'm not sitting in the room with these people. And they started to uncover some serious fraud, especially in the NGO system. I'm wondering if they opened up the door and then they said, "Wow, let's close the door." Like it's so bad that it might shake the confidence of the capital markets. That's just my speculation. I don't know, but the DOGE news has certainly curtailed quite a bit since all the revelations in February and March. It's been April and May, and we've trailed off quite a bit.
Yeah, I mean, I think the initial, and Elon Musk is always crazy ambitious with his goals. Was $1 trillion in savings, and then I think he dialed that back to somewhere around 250 billion, but they're at around maybe 12 billion in actual cuts. So what you're speculating is that potentially, you open up the hood and what you see is that the cure is going to be far worse than the disease. And maybe
it might be. But the other thing is they promised to go look at DOD. I really have not heard anything about the Department of Defense, which is the biggest line item in the budget next to interest expense and entitlements. So yeah. I found that very interesting. For this budget to really be cut, you need to look at defense and that defense. There's something going on there. Can we manage all our bases and keep our supreme power by just being more efficient? Is there a ton of fraud at the Pentagon? I mean, we all remember. I don't know. Maybe you don't know or don't remember, but there was an admission by a senior official in the Bush administration, 2 days before 9/11, that they couldn't find $2 trillion in the Pentagon, and then that headline disappeared off the face of the map. So we've had indication of Pentagon fraud for decades now.
Yeah. Okay. Other than defense, you've got Social Security, you got interest payments. There's nothing really substantial that is eligible to be on the chopping block when it comes to actually making a meaningful impact on the deficit. My assumption, I'd love to know your thoughts on this, was that DOGE was going to be a bunch of young, sort of AI-minded tech brains that were going to get in there and be able to analyze the details at a level of depth that we've never been able to. And so maybe you're not going to find the big $250 billion cut, but you're going to find dozens and dozens of $500 million and $1 billion cuts. And those are what we'd maybe see brought to light. Do you have any optimism that might be the case, that there's, or do you think, because, and simultaneously, as you mentioned, they've gone quiet, news flow about DOGE has slowed down, and simultaneously there's a new bill on the table that actually is increasing government debt substantially. And it's very counter to what the original mission seemed to be coming from the same office.
Yeah. It's what's interesting though is in the last quarter deficit growth spend, I looked into the entitlements, the defense and interest payments were fixed, but discretionary did flatten in the first quarter. So whatever they were doing had an effect. So they changed the second derivative. What you really need to see to keep this economy floating is for Trump to really accelerate government spending, because Biden did such an acceleration of it in 23 and 24, especially into the fourth quarter of 2024. Remember, the government fiscal year is September to September. So this current year budget that Trump inherited from him, Biden spent 13% above the prior year, and the total projected deficit for this year was 7% growth for 26. And so Biden's already spent all that, and so that's going to be a flat second derivative change. The budget deficit, for 27, 28 is obviously going up. So we're going to have some, economic problems. We see the headwinds. Even just stopping the flow of immigration at the borders is going to really have an impact. The consumer's really in trouble. And we're in the beginnings of a credit cycle with, auto loan approval ratings going higher, that meaning lower, but so it's getting harder to get approvals. We're seeing home prices starting to peter out. We're starting to see more and more bankruptcies. Small business surveys that no one pays attention to are abysmal. So it's going to, and I think the AI investment bubble peaked in Q1, both from a stock perspective, two things, stocks and actual money being spent. The GDP in Q1 under Trump, AI spend and data center spend contributed 1.2% to the weak GDP number that we got. We grew 70% year over year. That's it. It's done. That's the second. They blew their wad, and you're already hearing about cutbacks in data center spend. So there's a lot of headwinds: AI bubble bursting, real estate market and government cutbacks in certain areas, illegal immigration, which was a big boon to the economy. It's a big part of our report. When you throw 10 to 20 million people into economy, most of which are back half loaded, and using government funds to bring them in, set them up, wash it through NGOs, that adds a lot of economic activity. That's all going the wrong way on the margin.
Sure. Let me ask you about another trend that really emerged during the Biden years. I'd say it was there, but it kind of accelerated during those 4 years. And I'd love to know your thoughts on where it is now, but it's the erosion of trust. Pretty systemic erosion of trust in government, in media, in financial institutions. This really seemed to crescendo during the last couple of years of the Biden presidency. And there was a lot of narrative once Trump took the seat, mainly from the right, of course, but the narrative was, we're back, right? We're back. We're tearing down the old and rebuilding. What's your take on that narrative, Ed? And do you think there's any substance to it, or do you think we're continuing down this path? And if so, what is a continued increase in distrust? How does that materialize long term?
So Trump has a tough job ahead of him. It's not going to be easy to regain trust. And unfortunately, because of what happened under the Biden administration and all the fraudulent non-farm payroll numbers, which, by the way, that's starting to come out in the mainstream media. Fox News reported that potentially 400,000 payroll jobs last year were fake. So Trump's going to inherit a fake economy that's going to manifest into a downturn. So his favorability ratings will go down. Unfortunately, it's just the way it is. When the economy struggles, you take the hit. He also, a topic near and dear to me is, COVID and mRNA, which he does not want to talk about. Neither did Kamala Harris. That seems to be an elephant in the room. So that, unless they deal with that definitively, there's a lot of people out there who remember that and want justice for what happened during those 4 years, all the illegality, the lies, what have you. So far, there's been no movement on that front. There are some things that I didn't like that I found distasteful. Launching, Trump coins right before the inauguration. We all know what meme coins are, and if for better or worse, they're pump and dumps. That's a bad look. His son started an exclusive club. $500,000 that can gain access to, cabinet members. That looks shady. So, it's not perfect. Is he better than the old bosses? Absolutely. That was just right in your face corruption. They pardoned themselves. They were, awarding $100 billion to NGOs right before Biden left. Stacey Abrams got $2 billion for we don't know why. So, it's better, but it's going to be difficult. A lot of faith has been destroyed, and that takes time to rebuild. But the one thing I like about Trump is he says what he says right out in the open. You don't have to agree with it, but there's no hidden agendas. He just comes out and says it. And sometimes, obviously, some of what he says is crazy because it's the art of the deal. And with this drug pricing issue, it's going to get challenged in the courts. It's really kabuki theater, but it's masterful kabuki theater because he's going to make the Democrats defend this, why we shouldn't lower prices. So there's a lot of things good that are going on, not so good. He's got an economic downturn coming, whether he thinks so or not. And he's got to get his policies implemented if he's serious about changing, and restructuring the economy to benefit the middle class. Government spending is not going to do it.
No. Yeah, no doubt. That club, it's the new club in Washington, right? David Sachs and a few folks. It was initially a $500,000 ticket to buy a membership, and
this is Junior. Don Jr. started a club. It's David. It wasn't Sachs. Don't want to disparage him. It's a club.
Sure.
Maybe he's involved. I don't know, but I know it's Don Jr. starting a very exclusive $500,000 membership club to meet with cabinet members. I mean, that sounds shady.
Yeah.
That's pay for play, as far as I'm concerned.
Yeah. Okay. The Sachs on his podcast last week was talking about a new club they founded in Washington, a place where Trump Republicans can hang out. That was the sort of packaging around it. And it was $500,000 to buy a pass.
Well, then he's involved with Don Jr. So he may be part of it.
Sounds like the same thing. Yeah. Got it. Yeah, interesting. Okay. The kabuki theater concept is interesting. Would you mind unpacking a little bit what the core issue is around drug pricing, what Trump's intending to achieve, and therefore what he's going to force the Democrats to defend?
So basically, I'll tell a little story because I was on ground zero when this went down. As a Blackrock, I was portfolio manager during the great financial crisis. Then Obamacare came along as a bill. And prior to the bill details, remember famously, Nancy Pelosi said, we won't know what's in the bill until we pass it.
Yeah,
it was one of these secret, things. And no one knew what was in the bill. Wall Street was terrified that Obama, because, he styled himself as more of a socialist, was going to nationalize healthcare, which would have torched, make them into regulated utilities, basically, and torch the returns potentially for those stocks in that ecosystem. So the stocks going into the bill traded off a lot. There was a lot of fear. They got cheap. And then the day the bill was passed, there was a conference call between Wall Street and some of the people who wrote the bill to figure out what was going on. My analyst runs into my office and he's like so panicky. He's like, the corporations got to write the legislation. This is going to be huge for so he said, buy everything. So we did. We literally, and obviously the stocks were already up on that day because people were figuring it out. We bought every healthcare stock we could because we knew it was going to be a boon to the corporations. And so Obamacare was really a corporate boondoggle. And what Trump is trying to do is undo that, because a lot of the medical costs we see are due to price gouging and the Byzantine pharmaceutical benefit management companies that are the distributors. And so it's this complicated nonsense that effectively makes drugs in the U.S. expensive. So what's the Kabuki theater? He knows he needs Congress to pass a bill. Price controls rarely work. He'll be challenged in the courts. But he's made this an issue. This is an issue that's bipartisan. Bernie Sanders even wanted this. So now he's creating, with this masterful Kabuki theater, the issue. They're going to have to sue him. And then as we get towards the 26 midterms, he's going to probably, in all likelihood, get some legislation. Otherwise, these people are going to be labeled as wanting, the indefensible position of, we don't want to lower medical costs for the consumer, which is, how do you win with that?
Yeah. Right.
Yeah.
That's interesting. It's, because he'll need something by the midterms, right? The market's up today, but it's been sort of average to poor performance since he was elected. And the important part about that is that in his first term, he pointed to the market daily as the scorecard, right? That's the scoreboard you should all pay attention to. I'm doing a great job. Look at share prices. And he hasn't been able to point to that. My assumption's been he's throwing a lot of conflict into the global marketplace, creating some turmoil and uncertainty. That's crashing or depressing share prices of a lot of companies in the interim. But come 8 months, 9 months out from midterms, he's going to need the market to turn so he can point to the scoreboard again, and narratives will have to change, or he'll need a few arrows to fire at that point. Do you think there's some legitimacy to that thesis? What's your take, Ed?
Well, I don't know if he knows what's coming. They did a masterful job. When the tariffs were announced, stocks were already in a decline from the top in February. That was the AI bubble bursting. Then the tariffs created tremendous short-term uncertainty, and everyone was bearish at the bottom. And we're calling for a recession, and we weren't even that, because a tariff is not alone going to cause a recession. It's deflationary long-term. But we knew it's what's called an exogenous event, meaning you impose it it's self-imposed, but you can unimpose it instantly. And that's what he did. The moment that people thought the world was ending, he quickly, within 2 days, extended the tariffs to 90 days, and the stocks started to go up. Then and the whole idea was, and we wrote in a piece on this, because there was a lot of consternation about this. The idea is to get people to the negotiating table, because the calculations that he put out there, weren't really about the calculations. It was about just getting people to come to the table, and they have. So we knew there'd be great news flow of progress, and especially in Trumpian ways, maybe broadcast more progress than there actually is. And now we're kind of thinking the apex of the good news on tariffs, is over. And we're back, except that we now have 10% on goods to China, and 30% from China to the U.S., which will cause deflation. So masterful job in managing expectations and looking like things are recovering, but stocks and the economy forget stocks for a second. The economy is slowing, and he's going to have to deal with that in the fall. Hopefully, it's a deep, fast recession, and it starts turning around by the second half of 26. And then he'll have the drug pricing issue on the table, because they're definitely going to sue him. And it's going to take time for those lawsuits to go through the courts. There'll probably be some sort of decision on that sometime in 26. But it's going to be. This is not easy. This is not easy what we're going through as a country, and the fraud and deficit spending we did under the Biden administration was epically mismanaged, and it created a lot of false signals for a bunch of different institutions. If your payroll numbers are fraudulent, overstated, or juiced by illegals, the Fed made bad monetary decisions on that, probably kept interest rates too high for too long. Capital market participants are, over-allocated equities, under-allocated safe duration treasuries, and businesses made bad decisions thinking the economy was strong and malinvestment. So as this comes to light, and it's just starting to, just yesterday, Fox News reported on this, 400,000 fake payroll jobs. This is all going to come to light. And I've talked about this since December, that the payroll numbers were looking a little fishy versus reality, which is the QCEW report. The QCEW is actually the BLS, the Bureau of Labor Statistics. Their estimate is the non-farm payroll. It's their best guess. Then 6 months to 9 months later, reality, they actually get all the numbers. The QCEW is the numbers, and the disparity between the September quarter and of last year and the QCEW was non-farm payroll was 1.25 million jobs. So where did those come from? They just disappeared. So the economy's been weaker than people think, and bad decisions have been made, and it's all starting to come out in the wash.
400,000 fake non-farm payroll jobs. That is bonkers.
It's from Town Hall. There's an article from Town Hall on that.
That is remarkable. Okay. Where to even begin with that? So, we talked about the fraud, the deficit spending. At the front of the interview, we also mentioned the undermining of the US dollar strength on the global stage. That was, again, one of the sort of impacts of the Biden presidency. I got to ask, does the aggressive trade negotiation style that Trump is projecting all over the world, does that undermine trust in the United States to the effect that countries will begin looking for alternate trade partners, trade routes? Are you seeing a bit more of a fragmentation as a consequence of the sort of like explosive negotiating style of President Trump?
Well, in our report, we analyzed the coming trade wars and we analyzed the trade deficits. And the U.S. consumer is a consumer of last resort. Literally, these emerging market economies have to sell to us. The imbalances are huge. And it's not so much just the actual dollar imbalances and tariffs. It's more the non-tariff barriers. And if you read the executive order, they talked about that. And Peter Navarro talked about that. And these countries make it extremely difficult to, get goods into the country. They'll hold it up at customs. There's a lot of hidden fees, just things like that, non-tariff barriers. And that's a lot of the problem. The other thing you need to understand is, supposedly when all these trade deals were struck decades ago, especially with China and Mexico, the idea was, they were going to also rebalance their economy. And so you take advantage of the cheap labor, but then you would share more of the divide between capital and labor with the workers to turn their economies into, rebalance from mercantilistic, only manufacturing to also a consumer economy. They haven't done that. So that's part of the problem is the U.S. consumer is still the only one really, and some Europe a second, but we are the one. So that gives us a lot of negotiating leverage. So Trump's bombastic stance, while as crazy as it sounds, is rooted in reality. It's just a fact. And we took a look at China's corporate debt in dollars, and it was 26 trillion. Just their corporate debt, 26 trillion in US dollars. So on the margin, they need us because they'll have a debt crisis. I think that's why they came to the table so fast.
Interesting. So Yeah, it's funny how much coverage has come out since the meeting between the U.S. and China. And, a lot of it, quite frankly, Ed, has been that the U.S. capitulated, right? That China held the ground, did not budge effectively, and the United States had to roll back their tariff threats. And so you would dispute and diffuse that and say that's not what happened at all. In fact, that's backwards, correct?
Well, look, the media is going to spin it because they hate Trump. The reality is this. I wasn't in the room, but it looks to me like they went crazy with the insane tariffs to bring them to a negotiating table. And right now, we still don't have a deal. What we have is a 90-day pause while they iron out details, of which there are many, a lot of them non-tariff barrier issues. And China has a 30% tariff into the U.S. now, and we have 10 into China. That's not going to be good for China. And, China has to figure this out in the next 90 days. There's a lot of work to be done, but there's no deal. There was a lot of headlines that said there was a deal, but there's no deal. There's kind of a ceasefire with tariffs.
Yeah.
And if you go back to before the stock market collapsed on Liberation Day, if you had gone back to that day and they imposed 30% tariffs on China, that would not have been viewed as good. It just, the news got so bad and so ridiculous that 30% looks okay now. It's still not going to be good for China. Not good at all, and it's deflationary. Because people think, there will be certain goods going up, but overall, it destroys demand. So the whole system loses revenue. So corporations get squeezed globally by tariffs, and it's going to be deflationary because the price increase is, especially with elastic goods that could be substituted, the price increase is not met with the quantity demanded increase. It's the quantity demanded drops percent-wise. So like net, the revenues go down and costs potentially go up, some margin squeeze. And again, the more elastic your product, the worse it is. And so what a lot of consumers are going to do is just balk at these prices and just substitute, especially if they can.
Yeah. Okay. One thing I've been watching, Ed, has been the evolution of the Belt and Road Initiative, which was sort of a spawned by the 2008 great financial crisis. China's consumers in the United States and Europe were not consuming. They were in economic rehab for a couple of years. And starting in 2013, China began investing in the next generation of consumer bases, is one way to look at it, and the Belt and Road Initiative was investments in infrastructure, everything from refineries to mines to bridges to highways, clean water facilities, but a ton of money, like $100 billion per year from 2013 to 2018. And by 2024, $1 trillion allocated to over 150 countries. I think maybe if there was two goals, one would be to invest in future consumer bases for Chinese goods. Love to know if you think that's correct. And number two would be to invest in alliances in a potential future conflict with the United States so that these countries might support China's ambitions over America's. Big bet, $1 trillion. And I think maybe in the near term here, we're going to find out if it's an asset or if it's a liability, because 80% of those countries are in financial distress right now and close to defaulting on these loans and not in a place to become affluent consumers. What's your take on that project? Success, too early to tell, not a success? What would you share, Ed?
I haven't looked at that closely, but if I had to guess, China itself is in deep trouble. It has a demographic problem. It hit a demographic wall in 2020, and they had been growing gangbusters, until then. And demographics is destiny long term. You can't trade demographics, but you can certainly understand long-term trends. So they hit a demographic wall in 2020. They started to have a real estate crisis that is resulting in tremendous deflationary pressures in China. If you just look at the bond yields on Chinese bonds, they keep going lower. That's a sign of deflation. And they have workers that can't find work. And one thing I do know about the Chinese power structure is there's billions of Chinese. There aren't as many of them, the ones in power. So what they fear the most is their own people. And the way to keep their people happy is to keep them employed and working and feeding their children and their families. You may have noticed over, going into the demographic top, they were building cities and bridges to nowhere, ghost towns. They don't care if they build a city or apartment complexes that never get occupied. They just want to keep people working. But that eventually turns into a debt crisis. And this is where China is. They have a big, big problem. And that's why I think they came so fast to the table, is because if you shut down manufacturing, you have the potential for a revolution on your hand, or at least massive riots. So China has a demographic problem. Japan has a serious demographic problem that's going to start reaccelerating soon, worse than the one they had in the mid 90s. And South Korea has got a big problem. So we have that whole Asian economic power area is in demographic decline, which tends to make it a geopolitical situation high eventually, because you're not going to blame yourself for the woes of the country and the slowing economic growth. You're going to find someone else to blame, and that's why there's always been this Taiwan chitter chatter. That if China wanted to, point the finger at anybody for the people's woes, they'll blame the U.S. and then start something. So demographic declines are never good, but they're part of life.
Yeah. And, it's impossible to know what the birth rate is in China. And actually, they've off again, on again, stopped publishing that, in addition to a wide array of economic data. I'm not sure if you've been following this, but since 2022, the amount of economic data that the Chinese government publishes has just been vanishing. Everything from foreign direct investment to land sales to vacancy rates of, apartment complexes that have been built in cities, cremation rates, cremation data, down to production rates of products through to the annual production of soy sauce, just vanishing from the public record. And you watch that. And as an entrepreneur, I know there's been years over the last 2 decades where I've openly shared my financials with my team. And there's been years where I held that pretty close to my chest. It wasn't the good years that I was holding that data to myself. And so you have to ask the question, why would you be withholding so much economic data that you didn't used to? And this is only in the last 2 years. All kinds of economic data has just been vanishing from the public record.
I've noticed that trend, and it's only getting worse. I don't know if people know this, but the Chinese currency is pegged to the dollar. There's a dollar peg, and they don't want that peg to be upset because they like to manage it at times. But if they don't want the currency markets to probably know the true state of their economy. That's my only explanation for that. And also, they're viewing it also as national security issue because they don't want the U.S. to know how they're doing, especially if you're not doing well. Obviously, if you're doing well, you advertise it to the world. If you're not, you hide it so that it can't be used as leverage against you.
Yeah. Okay. Okay, interesting. So if I were to look at emerging economies that I'm most bullish on, you mentioned the demographic issues in China, Japan, South Korea, and those are hard to turn around for sure.
Yeah.
Some of the most favorable demographics are in the ASEAN countries, the 10 countries that make up Southeast Asia and about just over 800 million people. Where do you see as future centers of power, Ed? Do you watch any emerging economies as the nations to rise? What's your take?
Well, an interesting play that I would start looking at, but it's hard because it's early days, is Africa. They don't have a demographic problem. And the Kissinger doctrine since the 70s has been, we have to keep Africa poor to keep the Western nations rich. So it's been exploit the resources of Africa. So it's interesting, things that have to change a lot, but they have the demographic tailwinds, and they have a lot of resources. The question is will the globalization model of strip mining and not investing in the infrastructure of those countries continue, or can that, as globalization fails, do they shake off globalization and start to attract investment? That would be an interesting. It's early days. They have a lot of resources.
Yeah, and very young demographics. You're right, young, dense populations.
Yeah.
Right.
So again, I wouldn't go run into Africa and start pouring money in there, but long-term trend. If globalization is peaked and now globalization is receding, and the empire of the U.S. is receding in Europe and NATO, can the satellites, shake off the yoke of tyranny? Because the tyranny is done quite nicely. You support dictators and crony capitalism and corruption, and you just keep everyone poor.
Sure.
So that you can get favorable deals to get assets. And the Chinese have done a great job of going into Africa as well and doing this. So it's kind of been this wild west of strip mining the resources of Africa to the detriment of the people with a population that's growing. God bless them. I don't know how they're doing it, but they're doing it.
Right. Yeah, and African nations have been one of the biggest receivers of Belt and Road investment. And some crazy stories like the African Union building, the Chinese built it in 2013 in Addis Ababa in Ethiopia, and $200 million investment. They also supplied the construction crews and engineers to build the Union building. And this was in 2013. In 2017, some African Union techs in the building discovered that there was some curious behavior happening every night around 2 a.m. The servers would switch from servers in the building to servers in Shanghai, and emails, data, conversations from the day would be uploaded to unknown services in Shanghai. And after a formal sweep of the building, they found microphones and listening devices embedded in the walls and in the furniture of the Union building. And, obviously Chinese denied any involvement, but, regardless, the Union building subsequently removed all Huawei equipment and found a new security team. And, wild stories like that, but you never really know what the true story is. Very interesting nonetheless.
Well, the other thing I don't people realize is when China's been doing its Belt and Road initiatives in Africa, they import into those countries a lot of Chinese nationals to help with the investments and the whatnot, the infrastructure, because there's not the skill set in that country itself, and that also keeps a lot of their population happy because they have jobs even though they're overseas. So it's just keep people busy. Yeah,
no doubt. Okay, well, China has some of the most terrifying civil war history in the world. So, your comments about being most concerned about your domestic population and civil unrest, it's very real. In China.
And we don't, there's something I read somewhere that like an average year there's 60 to 100 riots in China that we never hear about, food riots or civil unrest. And we don't hear about them. I mean, they do a good job of locking it down so that it's kind of an information plasticity coming out of China.
Yeah, no doubt. Look, Ed, it's been great having you on the show. Thank you so much for making the time today. And if people want to hear more from you, read more of your work, where should we point them today?
Yeah, so we have a website, financetechnologies.com. Starts with a PH instead of an F. We're selling a deep dive economic report on our website, and you get about 100-page analysis of what we think is coming. You get an executive presentation, and you also get a video of Carlos and I going over the executive presentation. We have other resources available for free. All of our humanity project work regarding excess mortality and death, what have you. And then we have free economic resources. We put a lot of reports out for free that we don't charge for. The one on the economic forecast for the U.S. is a paid product. So we have a smattering of free and paid. So go there if you want to look at our economic stuff. I'm also available on Twitter at Dowd Edward, DOWD Edward, where I post a lot of real-time stuff.
I'll pop a link to your site right in the show notes for anybody who's interested in checking out more of Ed's work. And Ed, thanks again for coming on today.
Jay, thanks for having me again. Great to be here.
In 2011, after a massive earthquake and tsunami occurred in the Fukushima region of Japan, 3 of the Fukushima Daiichi reactors melted down in one of the biggest nuclear accidents since Chernobyl. Now, in the aftermath of this, nobody died directly as a result. However, the world started to shut the nuclear industry down. Japan shut down all of their reactors. Germany and several other countries followed suit, and nuclear energy was deemed a danger and an existential threat to humanity. Prior to this, uranium, the commodity that fuels these reactors, was ripping to all-time highs, a bull market that was unimaginable to most. And in the aftermath of this worldwide shutdown of the nuclear fleet, prices plummeted, and uranium was in a sustained long-term bear market, with the industry abandoned and all but forgotten by market participants. Now, everything is starting to change. We are experiencing a complete 180-degree turn when it comes to the uranium industry and nuclear. Countries around the world are embracing nuclear energy, all sides of the political aisle, from environmental activists to capitalists and everywhere in between. This is an opportunity unlike anything else I have seen in the commodities sector, and it's there waiting for you to grasp. So join me as we dive into Uranium Investing 101.